Hey guys and girls, welcome to the London session recap for Tuesday the 23rd of May. So we know we're currently in the daily pullback phase, nothing really too significant to the left, so we're just looking to follow that bearish order flow down to at least we take out this low or potentially extreme demand, and then we can reassess if order flow shifts and then potentially look for the continuation of that bullish trend. But immediately the easy trades or the path of least resistance should be to the downside until that changes. So as we know, we've just been following this 4-hour bearish order flow. We've currently pulled up into the recent 4-hour supply chain. So if that bearish order flow is going to continue, this would be the area in which that's going to go from, right? Because yes, we're reacting from demand, but when order flow is bearish, we only expect those to be reactions back to supply and for that to continue. So we zoom right into this range and keep it nice and simple. As we know, there's no liquidity in this leg. So if there's no available buy side liquidity behind a structural high for, in theory, institutions to use to sell from, then what do we want to see? We want to see it built to the right, either on this time frame or the next lower time frame, which we can use M15. But as we can see, we did actually build it because it's a bit more subtle. But this high here, what did it do? Well, it broke this low, right? This is a structural low. It's an inside bar because price comes up, comes down, comes up. So this high then breaks that fractal low. Okay, so it's not the most significant structure in the world, but it meets the minimum criteria. So we know there's going to be a decent amount of buy side liquidity above that high. Price then liquidates that. All right, the buy side liquidity sitting above that high, and that's where we can potentially theorize that institutions are using that liquidity to get short. So once we see that strong liquidation, it's an increasing probability that that pullback may be over and we may now be ready to potentially target that low. Okay, so in more simple terms, we pull back up to premium prices of this range. We've mitigated the supply range to the left. Okay, we don't have to hit the refined pivot level, even though that would be more ideal. And we have had that strong liquidation. The only thing we haven't had is that next bearish shock to the downside yet at this point. So it is kind of just moving sideways. But you would imagine the more probable scenario will be that will come down and take out this weak low. Now we do have some 4-hour demand here that did cause a bullish shock. So we may see a bit of a reaction from here. And potentially we could go higher, but you would probably expect more than likely we would take out that low. But there may be available quick long in here. It's just a bit lower probability, right? Those longs, ideally you want to get in here. That's the time to do it. Why? Because the objective is to play the pullback. Whereas if we've already had that pullback up to premium prices and then we're coming down, longs can play out, but they're a lot lower probability because the objective is complete and you're now buying from a weak low, right? So yeah, just to bear that in mind. So shorts really are kind of what we want to focus on. Now, if we bring price forward a little bit more towards around Frankfurt Open, we were around here, okay? So my M15 swing structure is essentially that 4-hour internal structure we were just talking about, okay? We got the bullish internal structure to facilitate that swing pullback up to the premium levels. We then had an initial strong liquidation on Monday, right, where we liquidated that high, but we didn't really go anywhere. We then just swept the low and we're just starting to get range bound. And then during New York, we took out all of these highs. So again, another nice big pool of liquidity that price has taken. Okay, and then we saw a nice shift in structure, and then we sort of saw that bearish order flow, and price came in during sort of Asia, and then was rolling down. Okay, so kind of want to talk about internal structure for a minute, because this is where I can see, and I've been guilty of this a little bit in the past, last year, overcomplicating things and kind of holding on to that internal structure when you don't need to. So what do I mean by that? Well, back here, we have really clear structure, right? We kind of take this low here, then we take the high, right? And then we have this, we'll just draw on this a bit quicker, right? We have this sort of clear internal structure, okay? And then this high price never actually closes above. So technically this is still your internal low, right? So you can, it's still correct to say that the internal structure is bullish. This could just be one pullback. This is a strong internal low, and we could get something like that. But once price kind of, get rid of all this, multiple times is sweeping highs and then we're sweeping lows, I just kind of stopped paying attention to the internal structure, because for me, we're just moving sideways now. And I don't want to read too much into, that this has to be a strong low. I'd rather just kind of focus on the range. Otherwise you can just get a bit too lost in it, in my opinion, and kind of rather focus on the more recent order flow. So once we, pull back up to the premium level, we've had that strong liquidation, and then we're starting to see that kind of more sustained bearish order flow. At this point, I'm just kind of focusing on this, viewing this as a weak low, right? It hasn't taken out anything. This is essentially your most recent sort of order flow range. We've got these equal lows here to target. So coming into the session, price action is there's nothing really that great going on at this moment in terms of an actual immediate trade, right? There's nothing I'm really interested in. I'm not interested in trying to like short from here if price comes back in, because this is kind of like the internal of the internal. I'd rather focus on the clear stuff, right? We get a clear breakout and then you pull back up and, you know, you're near the high, or at least if I am going to trade within here, I kind of want to focus on, you know, where that last, following the money, following the supply chain, at least in the premium of this range. I don't want to be forcing things in the middle down here, okay? So really for an immediate trade idea, it's just waiting for a bit more. We do obviously have a ton of liquidity below here, and there is still some possibility, like I said at the start, that this could be that strong internal low. So that's why I said in my pre-session analysis that if we come down here, definitely can look for a long from within here, whether it's just a quick pullback play or whether, you know, we're going to get another internal leg up to here. That remains to be seen, but we'll talk about that in a minute. So to try and keep things simple, overall we're bearish on the swing structure, which is in line with 4-hour order flow, so that's good. We had the 4-hour and the M15 aligned, so shorts really should in theory be the highest probability play. We pull back up to those premium levels. We've had the strong liquidation. The most recent price action to me is more bearish than bullish. So I'm basically looking for at least price to come down towards this low, and then we can reassess, right? Because if we come down into here, we've got all of this liquidity to look for a quick long, and then we can reassess, right? Because then we'd have some strong structure. That'd be our new internal high, and then we can look for price to come in and potentially look for the continuation of that order flow, right? And that's really the play. That would be my primary forecast. But for immediately into Frankfurt Open, this is where you just be patient and wait for a bit more development. So I'm saying stay out of the middle. We don't really want to be getting involved. We didn't quite pull it back up to here. If we did at this moment, when I can see price coming up, I was kind of debating in my mind, like, do I even really want to short from here? Because at this point, this high hasn't really achieved much because I'm doing that as the range, right? And at that moment, we would have come down, failed to take out the low, got a bit of an internal order flow shift. It's like, do I really want to short from here? There's no kind of nearby lid. It's like, maybe we got something really clear on the M1, but I wouldn't have been that keen, to be honest, if price was coming in here, because I could see like these highs getting swept, getting a bit choppy. So I wasn't really that keen either. I had my alert there to see what would set up, but I didn't really want to force anything from here at that moment. Now, once we broke out and we get a clear candle body closure below all these lows, okay, now we're looking like, you see, this is the range down here, pull back, just following on that, that nearest structure, just trying to keep it simple, right? And that would be that kind of new strong internal high, okay? But obviously, because we've taken out all of this sell side liquidity into a decent level, I'm happy to look for a quick long. Also, the reason why I'm also happy to look is because, the nearest sort of supply range is all the way up here. So I'm just looking to play a quick pullback play. Can I get enough risk to reward, ideally into this level here before we may continue down? So if we look on the M1, this is essentially what I'm looking for, right? I want to see a strong liquidation. Well, this low here, did it achieve anything? Yes, it broke structure here, right? Is it the best breaker structure in the world? No, it's an M1 chalk, but it's still there. So now we can know that there's going to be a decent amount of liquidity below this M1 low here, right? So in terms of the PBL, like what caused the liquidation of this M1 low, you can kind of do it the most aggressive way, which is take the nearest supply level and includes buy to sell wicks, and I'll sometimes do that. And then also there's the more sort of higher probable level that you'd really want to see go as well. So it's up to you which one you want to use. Ideally, I get both. So really kind of what sold me on this trade idea, so there was actually an M1 chalk down here because we got the pullback here, right? Then that candle broke the low, so that moment that becomes your fractal high, and then we get the M1 chalk, okay? And then we got the most aggressive PBL fell, but really what convinced me for this trade idea is we got like a clear shift in structure, okay? So it's very convincing shift in order flow. It's essentially like an M1 swing boss, and that's really what convinced me to then look to take this trade, okay? Because we clearly broke here to the upside. So I set a limit on the M1 extreme. Obviously, it's quite a big candle and there's no sell to buy. So I just refined that to the wick down here and looked at that trade. Now, again, what's the trade idea here, right? It's not the most high probable trade in the world. I want really to be focusing on shorts, but because we had a ton of liquidity here, like the previous day's low, equal lows, all of this range came into a decent demand level, and I've got enough risk to reward to basically just play a quick pullback play into this high here. Okay, that's all I'm trying to do. And I just looked at this for a quick scalp play targeting fixed 3R. Now, we did also have that kind of aggressive M15 PBL fell there as well, which I didn't draw on. Essentially, that would be, imagine that's an orange box. That's where, we got that lower time frame supply that came in and took out those lows, but you can see on the M15. So it's just, it's not the most amazing confluence in the world, but it is there nonetheless. We did also have that M5 chalk. So from an M5 perspective, would that be a trade I would consider? No, because, well, one, if you take it depends on where you enter within the M5 zone, but there's no real risk to reward here on the M5, and it's just an M5 chalk. There's no real, strong liquidation model in the recent price action there, so not something I would consider on the M5. But on the M1, you can, right? There's a decent amount of risk to reward if you are entering on this refined wick. Okay, and I just targeted 3R, which was, I can't remember exactly how wide my stop was, I think I had 5 pips, was somewhere around this little M1 range here. And obviously take into account commissions, it was something like that. So I got tagged into the trade, and then it was running nicely, moved to break even once this high broke. And unfortunately, just missed my TP. Hit me out for break even, swept this M1 low here by about half a pip or so, and then hit TP. So a bit frustrating, but it is what it is, a bit more of an aggressive entry anyway. But kind of, the main lesson I want you guys to take is very clean M1 entry model, right? It's not like price kind of came in, barely gives the M1 chalk, so then you get the fake break and kind of get like a little M1 thing here. It's like, okay, maybe, it's valid, but this for me was like, it's really convincing. Big shift in structure, clear on one boss, can enter at the extreme, got enough risk to reward to play that overall pullback into supply. And that was for me. If you got something that wasn't really that obvious and messy, then probably wouldn't have taken it. Okay. So yeah, end up taking a break even there, but it is what it is. So yeah, usually I try and get fixed 5R, but obviously I'm playing the pullback, so it doesn't make sense for me to want to target that through supply. I've tried to do that too many times, and it bites me in the arse too often. So that's why I'm just, I'm happy to take it. I want a minimum of 3R really. I don't really want to be taking trades for any less than that. But yeah. So now we're getting to the kind of the high probable trade idea, right? Because like I've been saying this whole time, we want to be focusing on M15 bearish order flow and M15 structure, because based on my analysis, that's the main play that I think could go. Yes, something could change, but until that order flow shifts bullish on M15, I'm going to keep following shorts, right? Try and keep it simple. Now, this was towards the end of the session. We obviously don't have any M15 lid in the leg, right? No inducement. It's a straight push. So ideally what I want to see is it built to the right before I'm going to look to take that short. On the M5, we didn't get anything. We didn't really get anything because price action is quite tight, right? There's no sort of, well, it's actually technically that high here did break that low, yeah, just about. So that could be your strong liquidation on the M5. So then you'd want to see that as your PBL go and your chalk, and then that would be your M5 entry. On the M1, okay, there's nothing super nearby here, right? There's no fake break, but we do have this nice clean high to the left that obviously clearly broke lows. So that can be used as your inducement. Okay, so where is the PBL? You have a pivot candle here, so that's decent. Okay, and then that's obviously your fractal low as well. So this would be your fake break. You would want to see go to use that liquidity entry model to 8. So we mitigate that level. Nice V-shaped reaction, so it's pretty decent. PBL fell, chalk. Okay, and then obviously there's no flip, so you would take the extreme. Now, if you want to be strict, you could take that whole buy to sell candle for sure. It's quite big, or you can refine that there to the inside bar if you want to make risk reward a little bit more on your side. And that would be the entry. Okay, so exact same thing, but just the opposite, right? That's the high that broke the low, gets liquidated. That's the point before the liquidation, right? That's the injection of demand that liquidated those highs. That's now failed. That's our mechanical definition to theorize that institutions have got short and overpowered the demand. And there's your entry, okay? And obviously if you want to take 5R, you can get that within a range which is decent. Or if you want to kind of do that more pro trend, pro order flow 10R, and you've got it to the nearest level as well, there's a decent trade there as well. Or if you want to take more of a technical target down to the low, you've got about 8R. So this is where my brain started overthinking things. I was like, it's coming towards the end of the session. I was thinking, maybe we'll get another leg up to that refined level there. There's no, I was thinking maybe we'll come up to this. Brain was just basically thinking all of these reasons as to why the trade might not be ready, and to why it may come up a bit higher, and also kind of just looking at the the larger and more obvious order flow, like it can just be this move to push higher. That's the actual fake break, and then we could go. And that's kind of what my mind was thinking, finding all these reasons to not take the position, even though it meets my plan. I just thought the overall larger structure is a bit more convincing, right? Whereas like kind of when you were here, right, you're just squinting at the larger structure, you see how it shifted. You've got that clear bust, not just like a little kind of chalk down here, which I thought this might be. I thought that might just be the move to do this. So yeah, I ended up just talking myself out of it and not taking it. And then especially when we started doing this, I was like, oh, these are just these. I just thought we were going to get 2B now, liquidity interval to 2B. That would be my nice equals. Then we get the break. So I was kind of like, yeah, I'm glad I didn't take the trade now. And then, as you know, yeah, it ended up doing that. And that would have been, yeah, a tidy trade if any of you taken it. So yeah, definitely a valid trade. I just overthought it. But this is kind of a thing I try and preach a lot is be aggressive with your entry models in the right higher time frame areas. So this is the shorts are trading with M15 order flow, with M15 structure, with the like everything's bearish in the higher time frames, right? As we've spoken about. So that's where you want to not be annoyed if you take a loss on an early position, right? Because okay, you take a loss here and it comes up higher, take the next trade, right? You're trading in line with everything, right? Whereas here is when you want to be a lot more conservative, okay? So yeah, that's just another, I guess, point to myself. These are the ones I shouldn't be overthinking. I should be willing to take the losses here, get a bit more aggressive with those shorts because that's in line with everything. The high risk reward is on your side. And there you go. That would have been a nice easy trade. So it's very painful to look at, especially when I took a break even on the more sort of lower probability and aggressive trade. And yeah, this hurts, but it is what it is. I need to learn my lesson from that. And get on board with it and kind of not overtalk myself and hesitate on this trade out of fear of that. So yeah, nice to see the strategy playing out. But obviously, we don't just want to be analysts. We want to try and capitalize on that and actually make some decent returns. So yeah, well done to any of those who took it. And yeah, nice to see that playing out. So it's looking likely now we may see that sustained bearish order flow until we then take out this low. Obviously we do have this 4-hour demand, but like I said at the start, right, that pullback's now over, so probably just expect it to be a short reaction and for us to go lower now. So yeah, hope you guys took some value from that, and I'll see you next one. Cheers.